Are you eager to start investing but worried you don't have enough money to make a real impact? The good news is that you can begin investing with as little as $50. In today's video, we'll guide you through 10 simple steps that will help you get started on your investing journey, even with a small budget. Whether you're saving for the future or just looking to grow your wealth, these tips will set you up for success. Make sure to subscribe to our channel. 1. Understand your financial goals. Before you start investing, it's important to define your financial goals. Are you investing for retirement, saving for a down payment on a house, or simply growing your wealth over time? Understanding your objectives will help you choose the right investment strategy. Setting clear goals also ensures you remain focused and avoid making impulsive decisions. Knowing whether you want short-term gains or long-term growth will help you select investments that align with your risk tolerance and time frame. If your goal is retirement in 30 years, a different investment strategy will be needed than if you're looking for quick gains. Clarifying these goals is essential to shaping your investing journey. 2. Start with low-cost index funds or ETFs. Index funds and exchange-traded funds, ETFs, are some of the best investment options for beginners. They offer diversification by pooling together investments in a variety of stocks or bonds. With as little as $50, you can invest in a broad range of companies or industries, spreading out your risk. These funds track the performance of a specific market index, like the S&P 500, meaning your money grows alongside the overall market. One of the biggest advantages of index funds and ETFs is their low cost. They typically have lower fees compared to actively managed funds, making them a great choice for someone starting with a small amount of money. They also require less research and effort on your part, as they're designed to perform in line with the broader market. 3. Use robo-advisors. Robo-advisors are digital platforms that create and manage an investment portfolio for you based on your risk tolerance and goals. They are ideal for beginners who want to start investing without having to pick individual stocks or worry about managing a portfolio. Many robo-advisors allow you to start investing with as little as $50 and offer automated rebalancing to ensure your portfolio stays aligned with your goals. Robo-advisors typically charge a small fee for their services, but they are often much cheaper than hiring a financial advisor. They can be a great option for anyone who wants to start investing but doesn't have the time or knowledge to manage their own investments. With robo-advisors, you get a hands-off approach to investing that still helps you build wealth over time. 4. Consider fractional shares. Fractional shares allow you to invest in expensive stocks with as little as $50 by purchasing a portion of a share rather than a whole one. This is especially beneficial when looking at stocks with high price tags, such as Amazon or Tesla. Fractional shares enable you to diversify your portfolio even with a limited budget, allowing you to invest in multiple stocks or sectors. With fractional shares, you won't have to wait until you have enough money to buy a full share of a company. This opens up opportunities to invest in some of the most well-known and successful companies without having to invest hundreds or thousands of dollars up front. It's an easy way to get started, even with a small budget. 5. Set up an emergency fund. Before you start investing, it's essential to have an emergency fund in place. This should cover 3 to 6 months' worth of living expenses to ensure you don't have to dip into your investments in case of an unexpected financial setback. Having an emergency fund gives you the financial security to invest with confidence, knowing you're prepared for emergencies. If you don't yet have an emergency fund, start by setting aside a small amount each month in a savings account. Once you've built your emergency fund, you can confidently redirect more money into investments. This step ensures that your investment journey doesn't turn into a financial burden. 6. Automate your contributions. Automating your contributions to an investment account is an easy way to ensure you're consistently investing, even if you can only afford small amounts each month. Many brokerage platforms and robo-advisors allow you to set up automatic deposits from your bank account. By setting up automation, you'll gradually grow your investments without having to actively think about it. Even with $50, automation allows you to take advantage of dollar-cost averaging, where you invest a fixed amount regularly, regardless of the market's performance. This approach helps reduce the risk of trying to time the market, allowing you to buy more shares when prices are low and fewer shares when prices are high. 7. Research before you invest. While $50 might not seem like much to invest, it's still important to do your research before putting your money into any asset. Whether you're choosing stocks, bonds, or funds, understanding the basics of the investment and how it fits with your goals is crucial. Look into the historical performance, risk level, and fees associated with the investment options you're considering. You don't need to become an expert, but spending time on research will help you make more informed decisions. Use resources like financial news websites, investment apps, and free online courses to learn about different types of investments. The more you learn, the better equipped you'll be to make smart investment choices. 8. Reinvest your earnings. One of the most powerful ways to grow your investment portfolio over time is to reinvest any earnings, such as dividends or capital gains, rather than cashing them out. Many brokerage accounts allow you to automatically reinvest your dividends in the same stock or fund. This process, known as dividend reinvestment, helps compound your returns, as the reinvested money buys more shares, which in turn generate more earnings. By reinvesting earnings, even with small amounts like $50, you can accelerate your portfolio's growth. Over time, this strategy can significantly increase your wealth, especially if you maintain a long-term perspective and stay consistent with your contributions. 9. Stay consistent and be patient. Investing with as little as $50 requires patience and consistency. It's important to understand that building wealth through investing is a long-term endeavor, and it may take years before you see substantial returns. Stick to your investment plan, continue contributing regularly, and avoid the temptation to check your investments too frequently or make emotional decisions during market fluctuations. The key is consistency. Even small, regular contributions can add up over time, especially when reinvested. By being patient and sticking to your strategy, you'll set yourself up for long-term success and avoid making impulsive decisions that could hurt your financial future. 10. Monitor your progress and adjust. While investing is a long-term strategy, it's still important to periodically review your portfolio. Monitor your progress to ensure your investments are on track to meet your goals. As your financial situation changes, or as you learn more about investing, you might need to adjust your portfolio to reflect your new goals or risk tolerance. Rebalancing your portfolio every 6 months to a year is a good practice to make sure it stays aligned with your objectives. Don't be afraid to adjust your strategy if something isn't working. By monitoring and adjusting your investments as needed, you'll be able to stay on course and maximize your chances of success. What's your first investment going to be? Let us know in the comments below. If you found this video helpful, don't forget to like, subscribe, and hit the notification bell so you never miss an update.